Hey, you guys, this is Uncle P from Super Easy Forex, and I want to just do another video for you guys. So this one has to do with emotional trading, okay? Emotional trading is something that every trader is going to have to deal with sooner or later, okay? Every trader. If you're going to put your money onto a trade, you're going to have to deal with your emotions, okay? So how do you deal with your emotions? Well, this question came up during class last week, and so I wanted to kind of share some more thoughts for you guys here on YouTube so that you guys can kind of get a better understanding of how to control your emotions during a trade. All right. The question came up, when do you cut trades? Because the question a lot of times what people are learning through Super Easy Forex is how to hold on to trades and not panic and cut them out early. Let me ask you guys a question. How many times have you ever been into a trade yourself and then all of a sudden you panic because it started going the wrong way initially, and all of a sudden you cut the trade early, you took a loss, and then you come back the very next day or a couple hours later only to find out it would have been a winner. It would have been a winner. How many times have that happened to you? Well, what happens is that oftentimes our emotions get caught up into the trade. And because of our emotions being caught up into the trade, we tend to get fearful. Let's just put it like that, fearful. Okay. Fear and greed controls the markets. Okay. Fear and greed. So what happens is that you get fearful. You end up cutting the trade early. You're taking a loss. Your account is getting dwindled, not because your uh, uh, assessment of the trade was wrong, but because you did not assess. Watch this, and always take notes whenever I'm doing videos. Okay, because again, you don't have to be part of the Super Easy Forex family to learn knowledge. Take notes. What you did not do, you did not take an assessment of how you were going to handle it. You did not take an assessment of your own emotions. And as I did a prior video about when you're over leveraging your account, remember I told you that there were three over leverages: financial, emotional, and time. Well, what happens is that a lot of times when you putting your money up on the line on a particular trade, your emotions kick in, especially if you're over leveraging your account, because now you have too much to risk and you're afraid of losing. So because of your fear of loss, notice that you did your full assessment, you went in, took the trade, but now your fear of loss is controlling your trade, not your technical or fundamental analysis. Your analysis got you into the trade, but your emotions are getting you out of them too early. So that's part of the problem. So until you're able to control your emotions, you will not have a long distance successful trading relationship with the Forex market or even in the stock market. So then the question is, how do you do that? All right, as I taught in class, and I teach this every week because this is a very vital, important part of trading, which never gets taught, never anywhere. There's a scripture in the Bible, whether you believe in the Bible or not, the principles are still the same. The Bible says that where your treasure is, there will your heart be also. I'm going to repeat that because that is so key in trading. Where your treasure is, there will your heart be also. In other words, you cannot detach your emotions oftentimes from your money and your money from your emotions. For an example, as I told them in class on last week, no matter how happy you guys are with me as an instructor during classes, if I took your money, I stole $1,000 out of your bank account, I'm no longer going to be the best mentor you think you ever had. You're going to try to find me down, hunt me, and anything else. Why? Because now I'm messing with your what? Your money, your moolah, your skrilla. You remember that old word skrilla? I heard that one in a long time. You're messing with my skrilla, bro. So the moment I start messing with your money, all emotions about how I used to feel about a person goes out the window because it's all about the money. Don't play with nobody money. You get what I'm saying? Don't play with people money, right? So when you realize that I cannot detach my emotions from my money and my money from my emotions, you have to factor that in on every trade. Do you get what I'm saying? Because what you're trying to do is fight against the flow of the river. In other words, in using terms as far as trading, your emotions are just like the trend, okay? And your money, once you put the money on there, Now it's going to either going to go with the flow of the trend or against it. So now you're fighting against your own self because of you putting money on a trade. That's very hard to do, and it's hard to master for many people. One of the tools that I do, hear what I'm saying, because I've been trading for a long time, but it's still hard for me to deal with it too. Why? Because the Bible's statement, where your treasure is, there will your heart be also. It's hard to break or lose my money from my trades, okay? There's a couple of things that I do to kind of fix this, and I'll share that with you and we'll call it a day. Number one, when I place a trade, oftentimes I don't have the MT4 on my phone. A lot of traders have the trading platform, the MetaTrader 4, on their phones. And so what happens is that you're always stuck on your phone, staring at your phone. You're supposed to be at work. You're supposed to be on a date. You're supposed to be out having a good time with your kids or whatever. But what is the truth? Are you really having a good time with your family? No. What are you actually doing? You're a part-time lover to your family because you're a full-time lover of the charts. You're addicted to the charts because now you have to watch that trade every second, every few minutes. You're flipping it out. So you're now addicted to it. Okay? And so what I've done when I place trades, I typically take the MT4 off my phone. I don't want it on my phone. So therefore, I'm not able to even keep consistently glancing at it. So whatever participation I'm supposed to be involved in, I'm actually involved in it. Now, in the back of my head, am I still thinking about the trade? Yes, I am. But it forces me to trust my analysis to let it play out. Because once you place your stop loss, oh, there's a ducks. You hear the ducks in the background. Sorry, y'all. Once you hear the stop loss, once you place your stop loss and you take profit, there's literally nothing else for you to do. Okay, there's literally nothing else but to wait for the trade to play out. But the problem is that you're monitoring it all the time. You're seeing it every second of the day. You're looking at it every moment. And so therefore, those ups and downs, fluctuations that happens as the trade is playing out, which is what the market does. I told you guys, the market is a psychological beast. You should never tamper with the market if you're not able to understand how it works. It is built to play on your psychological mind. That's the reason why you have the fluctuations in the market, because it's faking you out, making you think you're wrong. And the more you're watching it, the more you're going to be scared, because as soon as you place a trade, you already got what's called the broker spread. Brand new people, if you don't know what that is, that's the house always wins. The moment you place a trade, a spread is what the broker gets paid to take that trade for you. And you'll see that spread number open up, which is why I tell all of the people in my group, don't ever take trades at the very opening of the Sunday market, because the spreads open up really wide. The broker is getting a tremendous amount of money. So if you had a 10 pip stop loss, for an example, you have a 10 pip stop loss, but the broker is charging you 6 pips to get that trade on at the opening of the spread. Okay, it only takes 4 pips to hit your stop loss. So this is some things that I'm telling people stay away from. So going back to what I'm saying. So once I place a trade, I don't want to have these trades on my phone. I just do not want to have them, because it's a distraction and it causes me to be afraid. The second thing that I do is to control my emotions, is put on enough where you can make some money on the trade, but don't put so much on until you're going to be afraid if you lose. See, when you place your trade, and I taught this and I spent quality time with the family teaching this in class on Wednesday. The problem with many traders, hear me really, really good on this. Again, you can never hear another video from me. You don't have to bother with Super Easy Forex. I don't care. I'm just trying to be a blessing to you to really help open your thinking process. And if you were part of my Super Easy Forex class, you remember I talked about this. This part right here, which I'm about to spit to you, is fire. Okay, hear me good. When you place trades and you're placing a trade with your money, the biggest problem with most traders is this one key factor. When they place trades, they're more focused on how much they're going to make versus how much they're putting at risk. Okay, write that down. I can't tell you how big that is. If you're going to have a long-term career in this business, you better understand what I'm about to teach you, or just don't do it at all. Either do it right or don't do it at all. Okay, because this is part of the reason why you keep losing in the market. when people come to me with all kind of business ideas and stuff like that, hey, Uncle P, what do you think about this business? What do you think about that business? And blah, blah, blah. I'm going to turn this way because the sun is burning me, okay? I like looking at the lake when I'm doing it, but let me turn this way towards the house. And I should just did it at the house. Hold on. Hold on one second, y'all. Let me tilt this up. Well, I'll just deal with the heat. I'll deal with the heat. It's okay. All right, let me finish this video because it's pretty warm today. So let me finish this up and I'll call it a day. But here's what I'm teaching you guys. So when people, I learned a long time ago because I've been an entrepreneur since I was in my forever, okay? Forex ain't my first business. So here's what I've learned over the years as a business person, and this will relate to you when it comes to Forex. You'll get what I'm saying. I need you to get the concept of what I'm saying because it'll save your Forex career. So when people come to me with business ideas all the time, I just got one the other day. Hey, you know, here's a great opportunity, and I thought about you, and I know this person, but it's the same thing, you know. And the first thing people do is tell you how much you can make. Well, you know, man, hey, Uncle P, you can make XYZ dollars, man. It's nothing wrong with that, you know. You probably can, but for me, over the years in Forex and in business, I've learned a key factor. And if you get what I'm about to tell you, you're gonna see a great turnaround in your Forex career. What I learned is that I tell people this simple concept. Don't tell me about the sunshine. Tell me about the rain. Write that down, please. Write that down, okay? You're not gonna hear this anywhere else. I promise you, you won't. You really won't. Because I made these up over the years of going through business. And I just take these concepts into Forex and it helps. So write it down, take notes. So what I learned is a simple slogan to myself and to tell people, don't tell me about the sunshine, tell me about the rain. You say, well, what does that mean? What people typically do in business and Forex investments or whatever, the first thing what they want to know, they get all excited about, well, how much money can I make? How much money can I make? They do it in MLM businesses, and every business is always the same. They get you excited about how much money you can make. But what they fail to start with is how much can I also what? Lose. Do you understand what I'm saying? So for me, I have learned to reverse the excitement. I tell them, if you can tell me about how big the rain is going to be, and I can find an umbrella that's big enough for me to handle that, then the sunshine is all good. What do I mean by that? It's great you can make a lot of profit. Okay, hold on, my camera blurring up for a reason. It's great you can make a lot of profit. But what if you can't make the investment? What if you can't handle the investment? And let's say it's not about the money. Maybe emotionally you can't handle the investment, which is what many of your trader issues are. Emotionally, you can't handle the investment. You place the trade, but your emotions kick in. And now you're jumping around. You're moving your stop loss up and down and all around the place as opposed to leaving it where it was. You're staring at your phone all the time. Why? Because you were not assessing the value of the rain. How much am I going to lose? So for me, when I know that I'm comfortably placing a quality trade, it is a trade that I put enough so that I can make some money off the trade. But if I lose, I ain't even tripping. See what I'm saying? I'm not tripping if I do lose that. So what does that do for me emotionally? I don't have to sit around watching the trade because I really don't care what the outcome is. I've already did my analysis. I placed the trade with a good assessment of what I'm going to lose first. Notice that. Because what I showed them in class, I showed them an example trade in class, a live trade that I showed them in class. And I showed them the first thing I did, which most traders don't. The first thing most traders do is put their take profit in place. I do not. The first thing I do is put my stop loss in place. Why? Because my priority is preservation of my account, not profit that can be made. The sky's the limit with profit, but not the sky is not the limit with losses, because you only have a limited amount in your account. No matter how big the account is, it still has a limit. So therefore, you have to protect that first and make that the priority. So if you're one of those people who's always putting your take profit in first, then you already know you're making a mistake. Because what you're doing is you're assessing how much you can make, versus how much you're putting at risk. Always remember the sunshine versus the rain. It's very sunny today. Very, very sunny. Beautiful out here. Love it. But at the same time, when I wake up in the morning, it's very nice for me to know what's the weather going to be. Is it going to be rain? And if it's going to be rain, how bad is that rain going to be? And if I can handle the rain, then I don't mind going outside. But if I can't handle the rain because it's a 200-mile-an-hour torrential rain storm, hurricane coming or whatever it is, I have no business being outside. You see how I'm looking at the risk first before I'm worrying about what's going on outside? I love coming out every morning and feeding my fish right here. If you'll see, I'm going to tilt it down. See, I got my little chair right here. And I come right outside every morning, say good morning to the fish. I feed them fish, and there's bass, there's bluegill, there's turtles here, there's ducks here, and I feed them all. They know me. We cool people. Ain't that all right? You see what I'm saying? That's cool. But I am not going to step foot outside to feed now one of these jokers if there's a 200-mile-an-hour wind coming its way. See how I'm assessing the damage first before I worry about how fun things are going to be, before I'm worried about how much money I can make on the trade or in business. I don't care about how much can be made. I need to know if things go wrong, how much am I putting at risk? Therefore, when I'm placing a trade in Forex, the first thing I'm going to do is to calculate my risk. And there's many risk calculators out there that you can use. And then number two, the second thing I'm going to do is place my stop loss first, because I need to protect my account. In case this thing goes wrong, here's what I'm going to lose. And I'm cool with that. I know that in advance, and I walk the heck away. The problem with some of you guys, just to take it a step further, you already have done that, and yet you still are panicking off the trade. In that situation, until you can get your emotions under control, I really strongly suggest stay in demo account. I don't give a crap what these ignorant, inexperienced youngsters say all over YouTube about, well, is it a live account or is it a demo account? Listen, that's stupid. Okay, don't be ignorant. I'm so tired of this business. This business is so ignorant. This industry, the Forex industry, is ignorant. It's beyond ignorant. It's childish. Because nobody in the stock market, in all my years of trading stocks and options, nobody would even make a mockery of a person who's trading in a demo account until they get it together and then they move over to live. Unheard of. But in this Forex business, oh my God. That's like telling LeBron James, or God rest his soul, Kobe Bryant, that, oh, you shouldn't be practicing in the gym. You should just go straight to the court and do your thing. How stupid is that? Until you master your areas of weakness, don't go to a live account. So I don't care if it's a good assessment and you got all that done. Until you can master your emotions and control you, then stay in the demo account so you can learn how to just take it easy and train your mind how to just relax and just be at peace about the trades you took. One of the best things you do, which I teach in class all the time, look at your assessment of your risk. When you're placing a trade, if you have a $100 account, let's just say you have a $100 account, you're risking 2% of that account. Here's what kicks in people's head. Watch how this plays out. Boy, I'm telling you, I'm spitting fire and y'all don't realize it. Please share this video with some mature people who really want to learn, okay, Forex. Okay, please share it with some mature people, okay? Because I'm telling y'all, this business is just, it's crazy how people don't even see how simple this is, but they'll force you to think that you're doing something wrong if you're demo trading. No, you stay in demo until you get it together. And part of that may not even be your trading, it's just getting your emotions under control, whatever it is. You have LeBron James, they practice free throw shooting all the time. He practiced 3-point shooting all the time. He practiced layups. See how he practices these different areas? He ain't just a one-trick pony. That's what makes him good at what he does. So maybe you are good at placing trades. Maybe you're good at doing your technical analysis, but maybe you're horrible at your emotions. And that's what causes you to cut your trades early. Then stay in demo until you can get that under control. See, this is all about how much money you make. You have nothing to prove to anybody. Nothing. All these people out here trying to make, well, you this and you that. Hey, at the end of the day, you make your money to pay your bills. You got nothing to prove to anybody. So until you get you mastered, don't worry about what anybody else have to say. I hope this is being a blessing. I would love to have my comments on, but we got so many ignorant people who stalk our page just trying to mess up things until I just can't. I'm sorry about that. But I hope this is being a blessing. I really do. And again, I don't care if you ever join Super Easy Forex or not. If you do, you'll be coming to class with me and I'll be teaching you more of this stuff in depth every single week because we spend at least an hour and a half, 2 hours per class, and I teach twice a week. So you'll be live with me, no problem. But if you don't, I'm going to give you some free stuff. I told you guys, as promised, get a lot of questions. So I wanted to start doing, hey, Uncle P, what do you think? And this is the second one, okay? So let me wrap this up because it is warm and my wife is in there making breakfast for us. So I want to go make breakfast. But see, I kept my promise to you guys. I came out and did it. So let me finish this so you guys can really have something to think about. So for me, when I feel good, really, really good about a trade, watch what I'm saying. When I feel really, really good about a trade, it's not necessarily just the technical analysis and the fundamental analysis, which is basically taking a few minutes to check news, see what's going on. That's fine. But when I really feel good about a trade is when I mastered and knew I put on the right amount on the trade, meaning the standard amount that you should be risking on a trade is in this industry is supposed to be 2%, okay? About 2% of your account. So if you had a $100 account, you risk 2%. That's only $2. You still got $98 left to play with. So why at the end of the week you keep talking about I blew my account in a week? You see where you're going wrong? I'll tell you what happens. The moment I said, watch what happened. Watch what happens. And don't lie. Don't lie to yourself. Tell yourself the truth. Watch what just happened. The moment I said a $100 account, and I said you're risking 2%, which is only $2. The first thing that hit many people's mind is, I ain't gonna make no money if it were just $2. See, notice the first thing that hit your mind. Notice the first thing that hit your mind. It was not about how much you risk. It's about, well, I ain't gonna be able to ever make no money like that. You see where the greed kicked in. You see what kicked in first. How much you gonna make. And so therefore, because you said, oh, I ain't gonna risk no 2% of my account because $2, man. I said that's how much you can risk. I didn't say that's how much you can make. But listen to how your thought process kicked in. The psychological mind kicked in and only heard the $2. And so he'll say, oh, that's all I'm gonna make, man. I can't do that. And therefore, what do? You end up risking 20, 30, 40, 50, 60% of your account on a single trade. Why? Because you heard $2 and you said with your $100 account self, that ain't enough money to make nothing. I'm wasting my time. No, what it is teaching you discipline so that when you place your trade, $2 risk, man, please, I've gone, man, that ain't nothing but two things off the dollar menu. And therefore you're training yourself to take those kind of trades so that, guess what? I'm learning. I don't even have to watch the trade. I'm not even emotional about the trade. See, I'm eliminating my emotions. And therefore, if God blesses me to open up $1,000 account, what's 2% of $1,000? See how it's increasing? What's 2% of a $10,000 account? What's 2% of a $100,000 account? See, when you start in small, it's not about the money. It is about your mentality of how you're thinking. And the first thing that kicks in with a $100 account risking $2, man, you're like, man, I ain't gonna make no money on no $2. I didn't say you was gonna make $2. I said that's how much you're gonna risk at 2%. Even if you risk 5%, that's $5. That means you still got $95 left, dog. Why are you tripping? And when you look at it from that standpoint, okay, now you can see easily why professional traders risk small amounts and they can walk away and they're not really worried. But what they have done is discipline themselves to understand my job is to grow my account over time. This is not an overnight magic show, which is why I'm irritated with the Forex market. Because all over the place you see, and yes, y'all been seeing my videos for how long? So yes, I'm in a nice place with a lake and all that. Okay, but you've been seeing me before I moved here. I've been doing videos for how long now? See, I'm not an overnight shot wonder. You understand what I'm saying? It took time to build. But nobody wants to hear that. Nobody wants to hear it in this business. Show me a Lamborghini. Show me what your car is. Man, that ain't none of your business. I only take pictures out here because I like the outside. I'm an outdoor nature person, just like my wife. We like being outdoors. So yeah, I'm not going to be hiding from where yeah, I enjoy out here. It can happen, but you have to do things right. You have to do things right. Stop risking so much on your trade, and you'll see the less you risk and you really get that under control, the more your emotions are going to come in alignment as well. The more your trading strategy is going to come in alignment as well. Your whole Forex career is going to come in alignment as well. And I know a person, they hit me up all the time, okay? All the time. They started with a very small account, but they have been very consistent. Now they made, I think last week they made, I think $6,000 or $7,000 last week. But this is the same person who, from day one, kept their money under control. And to this day, because they show me their trades, and to this day, they still manage their money. No matter how good a setup is, they still put the same amount of leverage or risk to manage it correctly, so that if the trade goes wrong, they're okay. Let me share this last piece with you, why this is so important. I don't care how perfect a setup is. Hear me good. If you don't hear nothing else, oh God, I'm telling you, man, I'm telling you. In this business, this was being taught more often than it is. How to be consistent. Because when you're consistent, win or lose, which is going to happen, and that's what I was about to share with you guys, win or lose, you'll be okay. But here's what happens. I don't care how perfect a setup is. Watch what I'm saying. I don't care how perfect a setup is. What typically happens is that you got to remember, and I teach this every week in class, don't ever forget that you are trading two entire countries' economies at the exact same time. The euro versus the USD. That's the European economy versus the USD economy. And what you're hoping is that currency-wise, one becomes stronger than the other at the moment when you enter a trade. I get it. But don't ever forget that that country can come out with a news announcement that you were not aware of. The government can have done something that you don't live in that country, so you don't know. And all of a sudden, a spike will come out of just nowhere. How many times have you entered a trade and just out of the blue, it just started spiking from nowhere, and you don't even know what's going on? You check the news, you check your assessments, you say, hey, I did everything right. What happened? Don't ever forget what you're involved in. And if you forget that, then you just need to stay in them or quit. You really should, because you're forgetting what kind of business you're involved in. You're literally involved in two countries' economies every time you place your trade. And there's going to be scheduled announcements, which I teach you in my class all the time. Make sure to check news, But if you did, and then something stupid still happens, don't ever forget, it's because you're dealing with two countries' economy. They may have just declared war on somebody. That currency is going to jump. They may just declare that, hey, they're going to evict their president. Hey, what do they call that when they evict the president? Impeachment. Yeah, they may be impeaching their president, and you didn't know nothing about it. And therefore, there goes the currency pair. You understand what I'm saying? So this is why you have to use good amounts of money of controlling how much you put on there, because when you control how much you put on the trade, you're controlling your emotions better, and you're more able to stretch that account out in case situations happen that you were not aware of. So do you see how you cannot separate the two? So again, I'll recap this one statement and just take this with you. The Bible says, where your treasure is, there will your heart be also. Your corazón, for my Hispanic family, your corazón, there will your heart be also. You can't separate your money from your heart. How you feel about your money and what happens to it, you can't disconnect. Okay? But all you can do is, just like you're managing the trade, you have to manage your emotions. How do you do that? Again, for me, number one, I don't really keep the MT4 on my phone, because I notice I'm always going to be staring at the trade once the trade is placed. So I take it off. Okay? I take it off. If I need to put it on for alerts or something, then I'll put it back on my phone. Once the alerts to a trade that I'm waiting on, it comes in, then after that, I'm done. I take it back off. Number two, risk management. Don't place a trade and then put your take profit on first. You put your stop loss on first to protect the account. Why? Because what's more important is not how much you can make, but how much you can what? Lose. Number 3, always make sure you're not over leveraging your account by trying to be greedy. Okay, 2 to 5% risk, average. Keep it in that range, and then your account can grow over time, because even if you lose a few trades, guess what? You're still okay. I got an email from this professional industry, and they make indicators and trading system. They send me stuff a lot, right? But here's the point. They had this system that came out, and person took 50 trades off of it. 50 trades. Watch what I'm saying. They took 50 trades off of the trading system. They had a winning percentage of 78% after 50 winning trades. Okay, and well, all of them weren't 50. All 50 weren't winning trades. They took 50 trades, and after 50 trades were taken, they had an average of 78%. 78%. So if you're doing the math, that tells you what happened to the other percentage. You understand? 78 plus what? 22, I think it is, equals 100. So 22% of those trades did not work out. 22% of those trades did not work out. If you have an 80% winning trade record, 20% of your trades are not going to work out. It's okay. That's the nature of this beast. You're not going to win every trade. But when you think about it, that means if you're risking everything you got, you may be losing on the 20%, but you've just missed out on the blessing of the 80% that you could have won. Why? Because you're trying to be a home run hitter with one trade and risking too much. Now you're emotional and you're cutting the trade early. You're in, you're out. You're moving your stop loss up and down when you should be going for the longevity. Okay? Right, you guys. If you do want to join Super Easy Forex, cool. I'll see you in class on Tuesday. So you just joined today by going to superezforex.com, and it's in the description. So just look in there, the link to our website, and you can sign up today, and you have instant access. You don't have to wait for anybody to grant you access. PayPal controls the access. So the moment you pay through PayPal, guess what? You have instant access. Go log right back in to our website with the username and password you created. Go ahead and go through the tutorial programs. You'll be set up, and then I'll see you in class on Tuesday, and you and I will be talking live together. Okay, you guys, love you guys. Have a great weekend.